Investments in the Black community has always been a problem. We're going to go over some numbers of why these two scams in particular affected us harder than it will affect any other racial demographic in the country. It's pretty messed up. Stay tuned. I can honestly say that when the news of SBF kind of hit the news circuit and what was going on, the handwriting was already on the wall for a lot of cryptocurrency projects. There were too many pump and dumps, too many get-rich-quick schemes. A lot of us fell victim to it based off of the hype and based off of the fact that we were kind of late to the game due to, lack of knowledge and not knowing what's out there. So that had its effect. It had its effect, particularly at the time when there were more and more African Americans and people of color trying to get into crypto. Still are. But the thing about it is that at the time that broke, it was already hard trying to get family members and friends in the community to try to invest in anything that they really didn't understand. You were trying to educate them, but they really don't want to do that either. Then comes the problems generated by this latest case involving Cesar Pina. Now, we're going to leave his partner's name out of it because Cesar made a video talking about, what his role was. I don't think he should have did that, but such is the case. African Americans have always used investment properties as a way to make money. But again, here lies a problem in this pending cycle that we're about to catch ourselves in. We're going to look at some numbers posted by the Federal Reserve, where a lot of African Americans' wealth lies, where our income comes from, and I'm going to show you how these two scandals or how these two stories have the potential to deal a devastating blow to African Americans in particular. Let's talk about what's going on. First, let's talk about how it was that these two types of schemes, when it's talking about real estate and it's talking about crypto, how did it get its foothold into the African American community? Now, initially with crypto, when I got into it, it wasn't something that a vast majority of people who had technical knowledge about mining were into. As far as the investing side of it, it's always been the case, and these numbers are going to be backed up by the charts I pulled from the Federal Reserve of just how low Black investment is as a racial group in this country. But the reasons why we fall victim to this kind of stuff are threefold. One, there's the promise of getting some easy, fast money. We tend to gravitate to those things, and it's the culture behind that way of thinking. Fast talkers, big spenders, status, right? We tend to look at those things. That's why whenever you see videos with guys talking into stacks of money side to their face, or you see all the gold chains and the fancy cars in the videos, we associate wealth with something you can see, some tangible stuff. But let me direct your attention to some of the wealthiest men in the planet. They ain't doing that. They're not doing any of that. All right. So that promise of fast money and the culture that goes with it is part of the problem. And as I alluded to, the second part of this is that visual aspect, right? We tend to gravitate to what we see, and what we see, or what we think we're seeing, is enough to motivate us to make something happen. We associate stuff like that to celebrity, and that's a big no-no. Just because this individual has done something with his life and he's made it big doesn't mean you're going to have that same success, especially if you haven't stepped up and educated yourself on how he did it versus just trying to associate yourself with the name and the product. You know, drinking Douce does not make you the owner. You understand what I'm saying? So we have to stop that. You know, brand names have never put a dime in your pocket unless you own stock in that company. But I think the most damaging of the three is the last one, is the emotional investor over the educated investor. You know, we get our feelings tied into these things. That becomes our identity, right? Whatever we're talking about. So when you see somebody go out on a limb and they're putting their last dollar into, for instance, real estate, that's a big danger flag to me. You should always diversify. Now, far be it from me to, give you this type of advice, but this is just one man's perspective. And while we're on the subject, why don't we talk about the fact that channels like this, and I'm going to put it out there, you don't know what my background is. Why would you take advice from somebody you really don't know? Yeah, I may sound like I know what I'm talking about. It's because of the experiences I've had, but you don't know that. You don't know what that education level is. We tend to now look at YouTube, look at flash that we see, and use that as a judgment on whether or not this individual is successful. Let me start off by saying with that this channel was started while I was in some serious financial straits. I'm documenting what it's taken to get me out of those financial straits. It is not a pleasant sight. So, in full disclosure, I've never given financial advice on this channel. I dedicate myself towards the how-tos versus what should you do. Like, you'll see me talk about how to create a CSV file. What are the steps to getting your LLC started? I may have a little bit more education in some of these subjects than the average, but that's because of schooling and education I've had and experiences I've had. But I by no means am a lawyer, a financial advisor, none of that. You should not be so willing to give individuals your time, let alone your money. A lot of these channels out there will ask for a membership, and they've got just about as much investment experience as the next layman. Validate those sources before you jump into it. It's just not worth it. It's turned into a bit of a rant, but there's some reasons behind this, and I'm going to go over some of them right now. Now, again, I'm not saying this because I'm a financial advisor and I know better. No, I'm saying this because I'm able to read, just like you are, the things that are happening, and I'm able to look at my own experiences and see what's happening around me and kind of translate that into some content. Let's first talk about what's happening in the home buying market. How do African Americans typically build wealth? The Federal Reserve monitors this kind of information, and quite frankly, we are very property heavy. Out of all the investment types or vehicles out there, real estate is our number one vehicle. That said, we turn around and we look at what's happening out in the market right now. After a tremendous run up, property values going up, along with that, insurance rates, property rates, people are quickly finding themselves in the financial pinch where you can't afford all of these things unless you sell. Now, early on, people who owned and sold high and were able to wait it out or had another primary home to live in, that's fine. But if you sold that house just to rent, you gave away a lot of that profit because rents were so astronomical. But how does this actually affect African American investors? Well, quite frankly, things like what Mr. Pina was involved into, promising big promises, but what's happening in this market is why that was possible. He may have been able to make those payments if he was able to move those properties. Problem is, allegations are that maybe he didn't even own those properties at the time, or the money that was being used to secure those properties didn't actually go to secure those properties. But we'll find all that out during the course of the trial. And if you owe people some money, you should pay them. But that aside, what we're seeing all across the board, all across the country, when all these Airbnbs, all the rental investment trust applications, investors buying up huge swaths of property. Where were they buying those properties from? You guessed it. It was those starter homes. Those homes in that $150,000 to $250,000 mark. Those very first homes. That's where we live. And they were particularly targeting African American communities. They were closer to the city in many cases. It was just prime target. And as a result, a lot of these investments came in with more money than the residents would normally see, sold it, and then flipped it. $200,000-$300,000 more than what that property was worth. Those houses were staying on the market, the ones in my neighborhood, less than 30 days. Now, it's not the same. You have houses been on the market for 2 or 3 months. Signs for the first time, for sale signs, are actually staying in front of these homes. It hadn't happened since 2007. Was the last time I saw a for sale sign in front of one of the properties in my subdivision. It's just not the same. A month ago, there was 45 people lined up trying to buy a single house all up and down the street. That traffic is gone. So what does that mean for us? Now, if 80% of your investment profile as a community is tied up in a real estate, and that real estate market starts to plummet, those prices of those homes start to plummet, what is that doing to your net worth? Again, not a financial expert, but not a dummy either. There's going to have to be a reckoning. And whether you plan on staying in your home if you're a homeowner, or if you are looking to buy a home, you might want to wait till the dust clears. Those homeowners, if you can sell, I don't know. Talk to your financial advisor is what I would say. And I think you should. Now, another reason why we are constantly behind the 8 ball in the African American community is because we are constantly out of position. Right now, the vacancy rate for commercial property is at record highs, and it's not projected to even begin to start dropping until last quarter 2024. That's over a year away, and it is going to remain out of whack until at least 2028, and that's if we continue to go back to work. It hasn't happened yet. Now, as so many units square footage wise for commercial property is available, what do you think that's going to do to that supply demand curve? If nobody is paying those rents and these properties are now eyesores, like look at what's happening in San Francisco at the Western Mall type area, or any mall area for that matter. if you can rent one of those areas, or if it can be revitalized so that you can open up that storefront that you've always wanted, that this might be the time to do it. But again, talk to a financial expert. The facts are still going to remain that a lot of these properties are out here, and I'll be willing to wager that somebody's willing to make a deal. But we have to start taking this information for ourselves instead of just paying attention to what some celebrity says. Now, speaking of that, I want to take this quote from Jay-Z, who answered this meme that's been out there. You guys know what the meme I'm talking about. He's talking about, would you rather have $500,000 in cash versus lunch with Jay-Z? And, you know, people talk online and say, oh, the knowledge of that interaction will be great. Well, Jay-Z begs to differ. He actually said in his interview, man, take the bag. He's like, what am I going to say? And it is hilarious. But it kind of makes you think about what I'm talking about, is that celebrity factor. You want to be next to the dude that's making the money instead of getting the money. We got to stop that. That is no way to build generational wealth. You take that $500,000, if you were ever offered it, and build your legacy. Do what Jay-Z said. Take that $500,000 and go buy some albums, because he's already told you in those albums exactly what you need to know to build generational wealth. Now, lastly, what we're going to talk about is, why is all this possible? Why do we jump for the quick buck? Why are we falling victim to these things? Well, it's because of the economic realities that African Americans and people in the Black and brown communities face. There's a disproportionate wage imbalance in this country, and the things that we are investing in are particularly harder hit in these situations that we just listed. Now, coupled with that, with the coming calamity and a combination of the fact that we are so real estate heavy, we're looking at a 1.6% decrease in actual median income. That's huge. That's huge. When you compare it to other groups, we had the largest drop in income over the last year than any other ethnic group in the country. Yeah. Caucasian Americans' income actually rose during that same time period, but this is at a time period when inflationary pressures are just going through the roof. So we're spending more and making less, and that is not a recipe for building wealth. So you always have your back against the wall. So you're always looking for that quick buck. Now, saying that does not change the fact that we have to be more educated when it comes to this. Knowing what we know now, or what's happening with this real estate market, if most of your investments is tied up in real estate and you're looking at some shortfalls on the horizon, the best thing you can do is start, again, talking with a financial expert and seeing how you can make the best decision coming forward. In my situation, I'll be looking at talking to somebody with some very heavy chops. And maybe in some future videos, we'll talk about how to select an individual instead of just waiting to videos like this on YouTube, and seeing if we can discuss these things together and at least come up with a plan versus waiting for the next celebrity to tell you to invest with me. Let me know what you think in the comment section. I'd love to hear from you. I want to keep this flow going when we do begin to monetize and we're able to do live streams. Until then, remember, all money's not good money, so watch how you spend it. Talk to you later.